The world is moving fast and you don't have time to read headlines all day. This is Rushing, simplified news for busy investors. Made by a woman who trades and talks straight to the point. You'll get what's moving markets each day, why it matters, and where money's flowing. Subscribe and get this for free.
First headline: Trump presses India on Russian oil. What does it mean? The White House turned up the pressure on New Delhi to cut Russian crude purchases. India pushed back, signaling no immediate change, while trade talks continue. The headline risk points to more Russian barrels moving through shadow channels if formal routes shrink. Why magnify it? Energy flows are policy sensitive. Any shift in Indian buying or tougher enforcement on Russian shipments can ripple through grades, freight, and spreads fast. Possible affected sectors: global refiners, tanker and shipping names, integrated majors, emerging market FX tied to oil, inflation-linked bonds. Second headline: China's crude stock build slows. What does it mean? China's crude surplus fell as imports cooled and refineries ran harder. Less crude was left for storage builds compared with prior months, a sign that domestic demand and product exports are absorbing more barrels at current prices. Why magnify it? When China draws less into storage, the cushion for future demand spikes thins. That can tighten prompt balances if prices firm or if supply hiccups return. Possible affected sectors: oil producers and services, tanker rates, Asian refiners, industrial metals tied to China demand. Third headline: OpenAI valuation jumps. What does it mean? Secondary share sales and fresh demand from big investors lifted OpenAI's private valuation to the upper tier of global tech leaders. Capital keeps flowing to AI infrastructure and model training at scale. Why magnify it? High private marks extend the AI capital expenditure cycle. That supports upstream tools and accelerators and pulls in downstream spend on power and cooling. Dispersion remains high between cash flow winners and story names. Possible affected sectors: semiconductors and equipment, hyperscalers and cloud, data center real estate, power and cooling suppliers. Fourth headline: Futures firmer on earnings and cut bets. What does it mean? Stocks leaned higher into the session on expectations for solid corporate prints and another policy cut this month. The tape is balancing regional bank jitters with optimism around the AI leaders heading into results. Why magnify it? Policy direction and earnings guidance set multiple math. A softer rate path and clean beats broaden participation. Any miss or hawkish pushback can flip momentum quickly. Possible affected sectors: mega cap tech, cyclicals into earnings, banks via net interest income, small caps on financing costs, dollar pairs. Fifth headline: Central bank watch and volatility. What does it mean? Fed officials have signaled more easing is likely this quarter, while Europe leans toward a pause. Markets remain headline sensitive with geopolitical risk in the mix as earnings season ramps. Why magnify it? When policy is in motion and data are patchy, volatility clusters. That argues for tighter risk, clear stops, and selective ads on dips rather than chasing. Possible affected sectors: treasuries across the curve, utilities and staples, export-heavy sectors tied to the dollar and euro, volatility products.